I have things I've been reading about, like specifically about the demographics. Some reports came out about where the population has been shifting. I don't know, and Arizona is in the top five. That should come to no surprise to anybody, especially those who live in Southern California slash that area. And the other aspect is, I've been reading the panic on Twitter from the NFT collectors, the DeFi players about tax season. So the first one is population movements, demographics. There was I saw basically, I think it was like yesterday. I think it's the six top gainers and the six biggest losers in raw population. And you can see here, Florida, Texas, those are the ones kind of we know that's gaining. Florida is gaining a lot of people from, I would say, the Northeast. And my guess is Texas is gaining from everywhere, just because business is doing very well there, and low taxation. Arizona was kind of a surprise to me, but probably not to you, as you've seen Phoenix booming. North and South Carolina, I've heard this for a while now. They are very favorable business environments, very favorable cost of living, and their taxes are not high, but they're not low either. So, and then Tennessee is another, very much tax favorable state. And from the right side, California, New York, we know they're high tax, high cost of living. Illinois, not sure what else I can say about them. I don't know much about the Illinois. I know they're also raised their taxes a lot. But cost of living seems to be still low there. So, and then Massachusetts, Louisiana. I don't know why Louisiana is there, honestly.
But Louisiana is my biggest surprise on this list. The rest of them, I think you can guess.
Yeah.
You might just title this "Salt." It's just a salt chart.
It's right? Literally
it's
a salt chart.
Yeah. Which is so funny that, I don't know, tax reform. I mean, it's cost of living too, but the idea that taxes would have such a big impact on
it's also warmer, right? Like, look at all the states except for maybe Louisiana.
Right, save for Louisiana, which is a hot place.
Yeah. So, I think that's super interesting. It also plays into the cost of living and specifically the housing. I think every time I talk to you pre-recording, we talk about a little bit how's Arizona, how's Phoenix doing in terms of housing, because I'm looking for a house, so I'm just curious how things are there. And it seems to me that everywhere in these cities, these big cities, there's a lack of housing available. And the prices have just surged. It's very disappointing and disheartening for someone who's looking for a house at that stage where they've saved enough, what they thought they saved enough looking back 2 years ago for a down payment. And it's just insane. And the big question I have always is, will the prices go down? Will they actually come down back to earth? Will they remain as this high as they used to be, or will they go even higher? I don't have the answer to that, but it's very much frustrating, my ability to buy a house. I've run comps now of some houses, and in the area that I'm located in, the price went from probably like $340 to $380 a square foot to $500, and that's a huge jump. And that's the latest. I'd say 340 is probably at the low end. It was probably like 380 this was before COVID, and then right after they reopened in New York, the ability for you to tour houses, it was already at like 420 to 440. Some people say that the prices were going to come up regardless of COVID, that there was already a snapback because of lack of housing, population changes. The millennials are starting to look for their own houses, moving out of the cities, building families. But I guess this has just, accelerated that process, and the market is unable to respond.
Nothing especially interesting to add to that. This has been a trend since we started recording these videos, for sure. Hopefully that New York number will continue low enough to where you can buy a house. I want to transition into one little thing I wanted to save for this, which is I want to shout out first to a new Substack from one of the co-hosts of Up Only TV. His name is Kobe, Cobie, is the Substack. He just started writing it. There's like 3 of them out. They're all terrific. But this morning he wrote about probabilistic thinking, and I wanted to throw a little probabilistic thing at you that's on this topic as well.
I think, but
so I have
there's another word for probabilistic thinking, which is Bayesian.
Bayesian, sure, fancier. That's the well-educated way to say it.
Yeah. I don't forget what it's called, but like Bayesian thing. It's like something everybody talks about when you're investing. You need to carry out the probabilities of different scenarios, and that's blah blah blah. But anyway, go ahead.
That's right. It applies to a lot of decision making. I have an example here. So I bought a house with the minimum down payment that I could because I wanted my capital elsewhere, not in my house. So I have primary mortgage insurance. I pay PMI on my house. There is this decision point where I can, if I get an appraisal on my house, which costs $450, and that appraisal comes back at a certain level, I can remove the PMI, which is a small monthly payment that I have to make. But if I don't get that, which is, a probability as well, definitely a possibility. If I don't get that level in this, then that $450 is wasted, and I should have waited, or I should have, perfectly optimized for that. There's a break even there. I don't know exactly what it is. The break even will be a percentage chance that I think will hit the appraisal, right? Which you can guess about that, and that's fun. But yeah, it's just a fun little I can math this exercise out, right? Because the PMI cost, I know what that is every month. I can discounted future cash flows, get the present value of the PMI, and then I can compare that to this $450 chance, this roll of the dice on the PMI side. What do you think? What do you think I should go for? Should I do it pure numbers? Should I just get the appraisal regardless because it's a decent thing? My buddy who I said this to, who is a sports handicapper, a sports bettor, said that I should make it more interesting by going and putting 200 and whatever half of 450 is, 230 or whatever, and put it on black at the casino, give myself a 48% chance of doing it, and then use that to make the decision, which is a funny one too.
Yeah. I mean, I think you could probably figure out the data based on the comparables that they're using. Right, to figure out if it's going to land you above the PMI threshold, and just hire someone to do the appraisal. I would totally do that. Right, I would just try to find the comparables. Like I've done
do comps yourself.
Yeah, I've done comps myself to figure out what I'm willing to pay for houses now, because it's unbelievably hard to figure out what you should pay for houses. And so what I did recently was I looked at winning bids. Obviously, the price they listed at, what the price was the winning bid, got the average, and I looked at the time, right? And obviously, I tried to make sure everything else was equal, right? The style of the house, the lot size, the area within the area, like that kind of stuff. And I found the prices have gone up 9% in a year. Was it in the last? No, it was less than a year, 10 months or 8 months. So, but and then what those houses maybe are worth right now. You can actually figure that out. You can actually look at that. So it's been very helpful. The standard deviation, if you grab a sufficient number of sales, I would say 25, 30, you can actually figure out what the standard deviation is. So that gives you more leeway of room to see okay, well, it's, most likely 66% chance that the winning bid will fall into, here and here. Right. And so I think, from talking about a data point of view, you can actually run that yourself and do it. Also, you can negotiate with appraisal. If you have the comps yourself, you can probably talk to the appraiser, right? And give him, hey.
There are appraisers. If you search for appraisers, there's appraisers who put together a specific landing page on their site just for PMI appraisals. Right. So people understand the
Yeah, but doesn't the bank won't the bank tell you these are the approved appraisals we use, appraisers?
the letter I got from my lender did not mention that. Maybe I should reread it, but I don't think so. I think it was like a licensed appraiser.
Yeah. Okay, that makes sense.
You were talking about crypto Twitter having a meltdown on taxes and
Oh
probably the
yeah, this is
market
the
in
fun
general.
social one. So I have a Twitter handle that's basically, so I'm a CPA obviously, and obviously no, I don't know if I look like a CPA, but my wife says I do. I was following some people like who trade a lot in NFTs or investing a lot in NFTs. I don't usually do that. In fact, I've never done that. Never bought a monkey. I am very interested in the tax aspect of the NFTs and like how they're taxed. They're complex. What's going on? It isn't as complex as DeFi in general because there's way more things you can do in decentralized finance, especially with DAOs and like staking and like what you receive, wrapping. Like there's whole different things. NFTs is pretty much it's simple compared to that. But on the other hand, these people they're buying NFTs and sometimes in the coin that they're using is not the one that they're holding, so they have to do like a four types of transactions in order to buy one NFT. And so essentially they're selling one coin to buy another coin. And then with that coin, they're buying an NFT. And then if they want to sell and buy another NFT and another coin, the amount of transactions that occur in order just to get the NFT on, like to buy the NFT is pretty big. And so it becomes very like complicated. A lot of people have no idea how these things are taxed. Some people say, oh, I lost money on my NFT. But in reality, they might have made money in US dollars. And so, because they're looking at like, oh, I bought it for like 7 ETH, and then I lost, maybe sold it back for like 5, but they maybe bought it when the USD Ethereum was trading at like 3,100. And then now they sold it when it was trading, the value was like 4,500. I don't know. And so there could be fluctuations in the currencies that you're using when you're trading that.
The tax man only denominates in dollars.
Yes. And so, but that, it creates additional complexity. And what's interesting is the tax software they're using they're not going into your specific transaction. They're more looking at like when the transaction occurred, what was the price then in the market? And it's more like they're doing API calls to these different places, and you allow it to happen. And they're looking at like, oh, so the transaction occurred at 7 p.m. Oh, the price of Ethereum at that time was around this amount. So it's not 100% accurate. And that's an issue. They're not looking at what it costs you to buy that Ethereum. They're looking at like the average price. And so, I don't know. It's a mess. It's going to be a very messy time of the year for tax accountants. And there's so many different tracking softwares out there. At the end of the day, obviously, you can export it into a specific, CSV, and then give it to your tax accountant. And that's fine. But it's going to be very messy.
In 2017, I spoke with more than one person who had got themselves into this exact same type of conundrum where they had gotten the USD on ramp at a low price of Bitcoin or Ethereum, and then they had traded their Bitcoin or Ethereum for XYZ other coin, and then did this 15 times over. And they held all the way down, and the flip side of the roller coaster brought them very far down. But unwittingly, they had turned over their short-term, highly appreciated Bitcoin or Ethereum that got them in, made a transaction that was taxable, high in the market, and then proceeded to absolutely nuke their portfolio with dog shit, pardon my French, and not have the money to cover taxes and own something, illiquid or worthless or whatever. It's worth considering from the front end before you even make your first transaction, if only to make a game plan for like, hey, how am I going to understand this at tax time, and how am I going to get the records in the right place and stay organized? Each additional exchange that you onboard to, each additional wallet that you use is an added layer of complexity. I don't know. Be careful out there. Yeah, it's very much the Wild West.
What tax software are you using? What kind of tracking platform are you using?
Yeah. Yeah, I don't mean to poo-poo on anyone, but I took a new one for a spin this year and really didn't like it. That was Zen Ledger. And I went back to one that I had used in prior years, which is called cointracking.info, which I think is a German company. Just made more sense, worked a little bit better. So I'm back on Cointracking. Cointracking also has, helpfully, a list of CPA firms for US-based investors who are listed on their site that use Cointracking that would collaborate with anyone who needs help, right, or needs a second set of eyes to review things. I have a quick topic. I tweeted a video of this that I clipped from the Lex Fridman podcast with I think is the CEO of a Python-based software, data science, something company called Anaconda. The metaphor that I pulled from this was like an hour and something into the podcast. And Lex was asking, well, all right, what if we're interacting? What is this, it's a question about the AI in the future and what it's going to be like, whether it's multiple AI systems or whatever, way, way out in sci-fi land. And the guy getting interviewed, Derek, said that he wouldn't call what we have today an AI system, but he would call financial markets like the largest cybernetic system that we have on the globe that's uncontrolled, really, and uncontrollable. You can argue about, what levels of control people have, but it's a tremendous amount of people and a tremendous amount of algorithms 24/7 interacting with one another with an incredible amount of data inputs and outputs. And he used this metaphor that I liked for yours and my business about how in Star Trek they had ambassadors that helped you interact with these big crazy systems, right?
Yeah.
And he used the example of Jim Cramer being like someone who's an ambassador, right, interpreting what's happening. I, take some umbrage with Jim Cramer being the best example of who's like helping people interact with the financial markets, but regardless, the point stands. I thought that was a really fun one to think about. These incredibly complex systems, which is what financial markets are, what they can do for you, what you can do to interact with them, how to make that practical, what they're saying on a daily basis, how to interpret, how to act. It was just a fun framing for me that I hadn't heard before.
I find that aspect of, systems getting more complexity, and you need interfaces for, the human mind to be able to, there will be required interfaces between us and these systems going forward. You see it all the time happening. Airplanes get more complex, the flying, and so now you're flying fly by wire, right? That was like the famous interface that they designed. Before it used to be all hydraulics, right? So, these systems are getting more and more complex, so you need a proper interface. And I think in the long run, whoever owns those interfaces will actually be able to provide a lot of value and be highly valued, because those are the buyers or the customers itself. So you might have a really good AI platform, a very good algorithm, but at the end of the day, if your interface sucks, then you probably won't have anybody to use it or sell it to.